What is going on, investors? Hopefully you guys are doing well out there. That is right. It is Friday. It is time for the weekend, and it's time for the FAANG Stock Recap Show here on the Investor Channel, where every Friday we recap all the major news and the technical chart patterns from all the major FAANG stocks. Normally, this show is recorded after hours. So right about 1 o'clock, I sit down and record this show. I am recording this as we speak right now at about 7 a.m. Pacific time, meaning there's over 5 hours left in the trading day. We'll obviously keep that in mind as we roll through these stocks. We'll kick things off like we always do with Meta Platforms. Start of the week at 197, and this one just continues to drift higher. I'm seeing up over 4% to finish the week, close to 205 again. We'll see how the rest of Friday goes. Now, the TikTok CEO was on Capitol Hill this week, and he was saying that America data is stored on American soil, but he was not crystal clear whether or not the Chinese government has access to that. In fact, it sounds like the Chinese do have access to your TikTok data until they build some kind of Texas data center, which again is in the works. And so we'll see how this impacts things. It definitely seemed like there was some smoke and some fire on Capitol Hill. We'll see if they go through some kind of legislation or some kind of outright ban or a forced sale of TikTok. Obviously, the former, an outright ban of the company, I think Meta would probably rally another 10% on that news. Now, February is seeing a turnaround in Meta's ad rates. Now, not something that we talk about largely here on the channel, but we've seen a compression in ad rates over the last year. Obviously, you had the pandemic, you had a lot of spending related to that, you had a lot of shift to e-commerce. So there was a lot of shift into ads, and the ad rates boosted. They've contracted over the last year, and maybe we're starting to see them start to trough and maybe head right back up in the upper direction. That certainly would be good for Google as well. Moving on to Apple, start of the week at 155. I'm seeing this one up about 2.5% at the moment at about $160. This is after a manufacturing partner for Apple is discussing building a second India factory. Now, obviously the company is trying to do a little bit of a tightrope because China's business for Apple is a big deal. So they can't just completely turn their back on China, but from a manufacturing perspective, from a supply chain perspective, Apple definitely needs to diversify that a little bit, and they're moving over into India. Now, they're having some problems there. We've done some other news stories saying kind of the yield and the quality of the products coming out of India, not quite where it is in China, and so we'll see. Obviously, that's something that they can probably work on and progress. We'll see what happens here, but obviously protects Apple a little bit. There's obviously a lot of China risk and a lot of China smoke from a geopolitical perspective, and if Apple's able to diversify into India, would protect the company just a little bit more. Now, SoftBank's ARM Holdings, which is a chip company which is responsible for most of the chips that go, maybe even all the chips that go into Apple devices, they are going to raise chip prices for their designs in a way to revenue boost themselves ahead of an IPO. Now, NVIDIA actually agreed to purchase ARM, I think, for $50 billion. Regulators rather quickly kind of squashed that. Now it looks like ARM, which is owned by SoftBank, they're looking for some kind of IPO here very soon. SoftBank bought the company for $32 billion, so they're expecting something there. What I thought was interesting is the company is looking to charge royalties based on the value of the device with the chip is being used for, as opposed for just kind of the value of the chip itself. So if it's a chip designed to go into an expensive smartphone or maybe an expensive laptop or maybe other devices, they're going to charge more for certain chips just based on the end cost and kind of the end profit margin. And so that's something that will definitely impact Apple, and maybe we see some price increases moving forward. Apple is looking to spend $1 billion a year to release movies into theaters. I thought this was interesting. Obviously, Apple making a big push into entertainment. The other thing they're pushing big into is the streaming sports rights. There's not a lot of companies on the face of the earth that are going to be able to afford sports rights, okay? And in fact, I think the only companies that are going to be able to afford these rights are the companies that we cover here, the Googles and the Apples. And it looks like Apple is going to be bidding on English Premier Leagues. This is bearish, I think, for like the Comcast and the Disneys out there, because yeah, maybe Disney ends up with the English Premier rights. Maybe Comcast retains them or whatever. Well, they're going to have to pay twice as much because now you've got Apple in their bidding as well. Now, Apple also is making their Friday Night Baseball subscription only, and they're expanding that to 60 countries. So they kind of roll these things out, maybe give it away for free or give a wide access to that, and then they close it off into their ecosystem and force you to pay. Moving on to Amazon, start of the week at $97.10. I'm seeing a stock that finished the week roughly flat, right about $97. That's after the company cut 9,000 more white-collar workers, and more layoffs could be coming. I would imagine they probably are coming. Now, these are your data center kind of programmers. These are your white-collar workers, maybe your back office staff. What I'm hearing, though, is Amazon is also reducing some workforce from the warehouse, but I think the average warehouse worker on Amazon only works for like 3 to 6 months, so they don't have to announce layoffs there. They can just have the warehouse workers kind of churn off the line and not have to rehire or retain. So that's certainly something from a cost perspective. We're about a month away from earnings on almost all of these companies. We'll certainly see that with Amazon. We'll see if they can churn out some operating profits. That's something that's been lacking the last couple of reports. Now, Panera Bread is testing out Amazon's Palm Swipe tech for restaurant purchases. So essentially, you're going to be able to pay with your palm. I'm not sure where you integrate this. So I don't know how you take a picture of your palm and then you're going to go into Panera Bread and hover the palm over a card reader. I don't know about this. I mean, I think there'll be some use cases here. I think Panera Bread and certainly Amazon's own stores with Whole Foods and some of their other smaller concepts, they'll use this. But the Apple Pay and Google Pay, Samsung Pay, all those worked with some. We've seen some upgrades from the terminals that you use at the grocery store and other shops, but it used existing technology. This Palm thing seems like it needs another upgrade, which I don't know if retailers will be really excited about doing after going through an upgrade cycle already. So we'll see. This is just something that's incremental. It's something that they can use in their own stores, but then maybe, license to the Panera Breads of the world. Now, Amazon, Target to pick up Bed Bath & Beyond lost market share. Obviously seeing a little bit of consolidation in the physical retail stores like Bed Bath & Beyond as they're going to continue to close locations. Amazon and Target likely picking up some of that market share. Moving on to Netflix. This started the week at $297, and I mean, this thing's going parabolic. This thing's up nearly 10% this week, including up over 2% today. Finished the week or be at the current time. Again, we're at about 7:15 a.m. Pacific time. Plenty of time left in this Friday trade. Stock's sitting at about $327. Amazon's planning 100 plus new games with monthly releases this year. These are games. These are like video games. We've obviously done some news stories over the past year on their ambitions. They bought some gaming studios, I think even down here in San Diego. So Netflix doing a larger push into video games. They obviously see something here, and they've kind of dipped their toes in the water, and they're going a little bit further. Be interesting to see a year from now where this is for Netflix. Now, the stock initially dipped. We see the stock up 9% now for the week, but it dipped initially in the week as Bank of America says domestic subscribers look better than projected. So maybe people are digesting this and are starting to bid the stock even higher. From a technical perspective, you'll see it's just a thing of beauty for Netflix. Moving on to NVIDIA, let's talk about a stock that has just been moving higher. This one started the week at $254, up another 5% to currently be sitting at about $267 per share. That is a key week for NVIDIA as the company showed off its AI push with new platforms, new GPUs, new partnerships, new software stacks. Just an incredible presentation that NVIDIA gave this week, and it was called the GTC conference, I believe. And I think probably the most important news is they reportedly boost the orders of their AI chips, as obviously a lot of people are doing those trainings on those GPUs that NVIDIA makes, and it's almost kind of an exclusive relationship. Now, I posted, people are like, oh, you should talk about more speculative stocks. Doesn't work necessarily for YouTube. I also don't want to be, accused of kind of pumping my own book here. But this was an interesting story that just flew under the radar as it relates to NVIDIA. Now, Getty Images, so they obviously own license rights to a lot of images. They partnered with NVIDIA this week as you have that image kind of generative AI where you're going to be able to type in, show me LeBron James on a football field in a 49ers uniform. You're going to be able to type that into a computer, and then using like Getty Images that has licenses to these types of a lot of images out there. Well, now NVIDIA's software and Getty's images, in terms of their royalties and the combination there, could create some very interesting products. I covered this earlier in the week in a Seeking Alpha article. I mean, we're talking about a $3 stock. It's moved over 6% since I recommended a buy here. I had a friend that actually bought 1,000 shares of this, and needless to say, he owes me dinner. Moving on to Google, start the week at 100. This one just continues to drift upward. You'll see that from a technical perspective. Google sitting closer to about 105 at the current time. Shopify announced a Google AI cloud integration for merchants. Google's done a lot of integrations and combinations with Shopify. If Shopify wasn't like this, Shopify has still a massive valuation based on their revenues. And from a cleaner regulatory perspective, I actually think Shopify and Google as a combination of a company, like Google buying out Shopify, would be amazing. And so we'll see. If Shopify's stock continues to drift lower and Google thinks they can maybe get that through regulators, they have so much stuff integrated at the current time. I think Shopify and Google might combine forces in a more formal way in the future. Now, Google is releasing its AI chatbot Bard for public use, and I actually used it, and I thought it was really cool, very similar to ChatGPT. Not as fast, it seemed like. It didn't give the response maybe as quickly, at least from the internet connection I was using. But I did some light testing on the Bard, and it looked pretty cool. We got more news flow, though, on Google and how they're going to use AI on their different kind of Google workspaces. This is Google Docs, this is Google Sheets, and this is particularly email as well. And, look, we're just seeing kind of the early days of this, where maybe you get an email from somebody and Google's going to basically just respond to that email yourself. They're going to be able to take notes from any type of presentation and any type of Zoom call that you might have, or in this case, a Google Meet call. Things are going to get more automated, and Google and the next company that we talk about here is Microsoft. They're going to be at the heart of all of that. Moving on to Microsoft, start of the week at 275. I'm seeing a stock that looks like it's going to end the week roughly flat. Now, this is after Activision Blizzard. I'm seeing up over 7 or nearly 7% today as a UK regulator starts to narrow its inquiry scope into the Microsoft merger. This one looks like it's heading for the finish line, and it looks like that Activision deal is going to close over at Microsoft. And in some ways, for Microsoft, it's not the worst thing, because they've, it's given themselves, a year and a half, 2 years almost to kind of, first of all, develop the cash flow to complete this deal, but maybe integrate it a little bit smoother once it does go through. Now, Microsoft's backed OpenAI at support for ChatGPT plugins. This is the next step, okay? So, OpenAI ChatGPT, if you will, it's kind of like the iPhone and the iOS. The thing that takes this to the next level is a, quote, like app store, and obviously integration and plugins and those types of things. And some analysts out there don't believe that an app store for Microsoft will be a material risk to Apple. I would say that's probably true, but I tell you what, for Microsoft, it will be material. Once you have, there's already developers developing a ton of stuff on OpenAI. Once it opens up even further and it becomes more ubiquitous, it's going to create more and more revenue opportunities for Microsoft. Now, moving on to Tesla, start of the week at 177. This one's moving up over 7% to close the week closer to $190 per share. Tesla likely to post strong Q1 retail sales in the country of China. We obviously seen them doing a lot of different things from a pricing perspective, and it's believed that the company is going to post strong numbers. We should get those in about a week in China. Now, the competitors, though, in China, not doing as well. We had XPeng earnings recently. We had Li Auto earnings. These are publicly traded China EV manufacturing companies. You also have BYD, and they're reportedly reducing shifts at multiple plants. We are going to see, look, the electric vehicle space, there's going to be a lot of players, but like the stock market has been since the beginning of the time, there's going to be like a winner, okay? You know, when you look at search engines, there was a winner. When there was online retailer, there was a winner. There, you know, when we're looking at the different things out there in the stock market, there's usually one winner and maybe a second place, maybe a third place. There's room on the podium for maybe three. You know, Tesla's right now looks like to me, they're going to be the gold medal winner. And I don't have the story up here, but it looks like Ford is going to burn through $3 billion making EVs this year. Tesla might make $3 billion this quarter making EVs. They are so out in front of everybody. It's impressive. Now, Tesla zooms out of junk status rating. That's in terms of their debt rating, as Moody's makes the blue chip. It makes it a blue chip credit company, which is important in this interest rate environment. But particularly if you believe, like I do, this time next year, interest rates will probably be at the very least flat to where we are, but more likely, in fact, the market's pricing in kind of a downward move. If Tesla needs to borrow money and they want to borrow it at 2, 3, 4%, they're going to be able to do that because they have a blue chip rating. Now, moving over to the technical segment of the show, the internet at the location I am is not as fast, so we can't really kind of breeze through these charts. But right now, the S&P 500 it's in no man's land, okay? In the very shorter term, we're making lower set of highs. This is bearish. This looks like to me, you want to come down here and probably retest these lows or come near these lows that we made maybe a week or so ago, but you are still making a series in kind of the intermediate term series of higher lows, higher highs. But the grand scheme of things, folks, and I've tried to emphasize this a lot on the show, is really this blue square. We've, for a year, for 365 days now, virtually, we're in a 14% up or down trading range on the S&P 500. So as the doom and gloom people come out and say, oh my gosh, the banks are going under, there's bank runs, the economy's going into a deep, dark recession and depression. Well, during all that time, we're in a 14% up or down trading range, which is really nothing in the grand scheme of things when it comes to any kind of market, but particularly a large stock market like the S&P 500. We're right in the middle of that trading range. Wouldn't surprise me right now if we head lower. Wouldn't surprise me if we go higher. I know that's not the analysis that you were looking for on this Friday, but right now we've got no clear direction on the S&P 500. Now, we do have clear direction on Metastock, and it is literally straight up in the air. Like, this is one of the steepest uptrends that I've really ever seen. Yeah, there's been times when you've had these steep uptrends with Meta, and here we are. We keep saying this. We're still a ways away from overhead resistance. Overhead resistance should materialize in the $210 to $220 range. We're still $5 to $10 away, maybe even $15 away from seeing that. Subsequent pullbacks could be deep with Meta, but complicating the situation a little bit is you have earnings almost a month away on April 26th. Obviously, keep you abreast of that here on the channel. Now, Apple made an interesting move this week. Talked about how there was some areas here that you would wanted to see Apple kind of churn through. More specifically, kind of this 157 level. It burst above that earlier in this week. Now, it doesn't surprise me that we're kind of sitting right now as we speak. It's about 7:30 a.m. Pacific time. Again, about 5 hours left in the trading day and some change. You're sitting right on an area of support. You would like for this one to continue to move higher. If this one continues to move higher, the S&P 500 will more than likely move higher as well. You really need to get above these highs that you made back in August of last year. You need to get above 175 on Apple. You get above 175 on Apple. And yeah, everything else in your portfolio is probably going to look pretty good as well. Moving on to Amazon, looks okay. Okay, we've had the green box on Amazon stock for at least a year now, probably. And we're kind of towards the top of that at about $100 per share, currently sitting at about $97 per share. Really, from the bull case, if you've been accumulating this stock, you want it to just continue to kind of inch its way higher. Complicating the situation, kind of in a good way as well, is you have earnings on, it looks like April 27th. That'll be a Thursday, just over a month from now on Amazon. Any break lower on Amazon would be bearish from a technical perspective, but you would have the support down here of these lows that we made back, it looks like in January, at about $80 per share. Moving on to Netflix, here's just a beautiful example. These charts aren't perfect, okay? In life, there's nothing that's perfect, but these charts will really help you out. So, I know that you're watching this segment, so you believe in technical patterns, because look at what Netflix did. It came, it was up here literally just a couple of weeks ago. It was up here at 375, came all the way down here, but found a very logical place to at least get a bounce down here at about $300 per share. And now here we are, 10% higher. Now, the very bullish move will be like a meta move and kind of retest these highs up here at 370, maybe push all the way up into the 390s. That would be very bullish. Complicating the situation is Netflix is actually one of the first to report of this group. They are going to report less than 30 days from now, on April 18th. A bearish move on Netflix takes you lower than kind of the $300 per share range. Not exactly sure what would take you there. Now, speaking of parabolic, there ain't nothing bearish about this chart. Holy crap. This is pricing in everything and more with the AI chips. And I think NVIDIA, obviously, NVIDIA is going to benefit. Now, NVIDIA, we don't get earnings. We don't get a read on earnings until a little bit later. We actually get them in May. So we're basically 2 months away from NVIDIA earnings. I think what we are going to find with NVIDIA is their stock is going to benefit in the shorter term on this AI stuff. And people are certainly doing the logical thing and pricing in a lot of that. But I actually think the incremental profits over time, because look, you buy these AI chips, there's going to be innovations there. There's going to be others that come to market. It's going to take a while. Look, AMD and Intel ain't going to catch up on this GPU stuff anytime soon. But the training of these AI models, I think over time, they're not going to need to require as many as the GPUs and maybe as the most expensive ones. You're going to be able to train these things on a lower number. And then also, once you train these models, there is still a need for the GPUs, but it goes down a little bit. I'm not saying the demand is going to fall off the map for NVIDIA anytime soon, but I think the incremental profits is going to be over here at a company like Google, and the stock is certainly reacting like that. Is hitting an area of resistance at like 105, 106. You would like to see this stock power up, make a new higher high. The highs that we made back here in February at 107, you'd like to get maybe up to 110 on this one. Would be very, very nice. We'd be expecting some kind of pullback there unless it goes meta or NVIDIA parabolic. Google looking relatively strong. Also looking very strong is Microsoft. This one also, it's in a shorter term uptrend, and it also has kind of gone parabolic. We're sitting at the top of the range. This did what you wanted to see Google do. It made another higher high this week. So we've made higher highs since October on Microsoft, and it's looking very good. That, in my opinion, means any kind of pullback in Microsoft is a buy. The area you really want to watch for is 250. You wouldn't really want to see this one get lower than 250, although it's really the line on the sand is probably 2.25 on this one. A break below that would break this technical pattern, but for right now, this looks beautiful. It wouldn't necessarily be a buyer here, but this looks beautiful on any kind of pullback. And then finally, we have Tesla. I cleaned up my chart. I think some people commented I had like a million lines on my Tesla chart. Looks like one of their full self-driving maps. So I cleaned it up a little bit. And, we've created this V-shaped type of recovery. We're currently sitting on this purple line. It is sitting on an area of support at 185. It's not breaking meaningfully below it. It's not powering up above. Tesla reports their earnings. They're a little sooner to report. They report on April 24th. Again, all these dates are probably to be determined, but we're sitting 30 days away from Tesla when it comes to earnings. Folks, that was the FAANG Stock Recap show for a Friday. I hope you have a safe weekend. We'll be back here very soon. And again, we're 30 days away from most of these companies reporting. We'll be here to cover it here on the channel. Hopefully you guys have a wonderful weekend out there, and good luck with your investments.